بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على رسوله الكريم وعلى آله وصحبه أجمعين أما بعد. First of all, we would like to welcome you all to joining this program, and we appreciate your attendance. Inshallah, this program is beneficial for you as well for us, inshallah. This program is brought to you by ShariaPortfolio and in collaboration with New Westminster Islamic Society in Marple, Vancouver. So alhamdulillah, we have been collaborating with them to basically convey and spread the awareness of Sharia investing and Sharia portfolio and what we do, alhamdulillah. So we would like to thank you all for that. Today, inshallah, you're going to be learning about value investing from Brother Nadeem, who is a CFA and has, mashallah, a lot of experience in this part of investing. And alhamdulillah, he's been working with Sharia portfolio for a long time. Myself, I'm just here to mention a few things, inshallah, that may be beneficial and maybe of use to some of you. It's very important to know that Allah subhanahu wa ta'ala in the Quran says, Ya ayyuha alladhina amanu kulu min tayyibati ma razaqnakum wa'amalu salihan. Allah says that, O you who believe, eat and consume from the pure wealth and sustenance that is provided to you, and do good deeds, act righteously. The scholars have said that this command, that to consume halal wealth, to consume halal provisions, to consume halal sustenance and food, is connected to that other command in the Quran next to it, وَعْمَلُوا صَالِحًا, do righteous deeds. The scholars said that consuming halal wealth and acquiring halal in our lives, in our provisions, it results in the ability to do good deeds. So the ulama have mentioned and discussed that it is so primitive and so important and significant in the Muslim's life to be concerned and focused on every single part of their consumption, whether it's from consuming halal to the stream of money that food is purchased with. The goal is to bring halal from every part of our life. And this is a clear command in the Quran. In some ahadith, the Prophet ﷺ said that a man will not be able to move on the day of Qiyamah. When the day of reckoning occurs, everybody will be at a halt until they are taken account for certain things, and one of those things is the wealth that they acquired. How did they acquire it and how did they spend it? So alhamdulillah, in Canada, and as Muslims have migrated throughout the last 80 years from different countries, there has been a large demand and a growing demand for the need for Islamic finance, for the need for Islamic opportunities, sharia compliance, the need for Muslims to gain wealth, but for them to stay within the spiritual and the religious guidelines and restriction limitations that they're given by Allah subhanahu wa ta'ala. It is important that we strive and we work towards that. And this is essentially the purpose of Sharia portfolio. So halal investing, what Nadeem inshallah is going to be speaking about and advising you and educating on, is primitive to the life of every single Muslim that is attending this program. It is also important for every other Muslim that is unaware of this. Alhamdulillah, we follow UFI guidelines, so we are keeping a very high standard in our Sharia compliance, in our rules and our requirements and guidelines that are given to us by senior scholars around the world. And we take that very personally, very intimately. It is something dear to us all, alhamdulillah. And we want prosperity as well as prosperity in this world and in the next world. Allah subhanahu wa ta'ala has put us in this world to test us, to question us, and to reward us based on that test and based on that act and choices that we have made. So it's important to first gain the knowledge of what you need so that you can invest and you can grow your wealth accordingly. And this is where a very important individual such as Brother Nadeem comes in to help you get the best of both worlds, so that inshallah you can grow wealth and you can also sleep with a good conscience, with no guilt and no regret, and with the aspiration and hope for great reward over the fact that you are coming closer to Allah subhanahu wa ta'ala and also advancing in this worldly life. That balance between these two things is a great thing. This is something that we read in our salah. رَبَّنَا آتِنَا فِي الدُّنْيَا حَسَنَةً وَفِي الْآخِرَةِ حَسَنَةً وَقِنَا عَذَابَ النَّارِ. We always read this dua. You hear it all the time. You're taught it as children. That, oh Allah, give us good for us in this world and good for us in the next world, and protect us from the fire. Yani, the dua is that we ask Allah subhanahu wa ta'ala to give us success in both worlds. That is the greatest success, so that in the next life we are protected, we have a good connection to Allah subhanahu wa ta'ala and a good outcome in our lives. Nabi sallallahu alayhi wa sallam, he once said one powerful thing, and it's something that all of you participating and joining today should keep in mind throughout this seminar, throughout this presentation, is that نِعْمَ الْمَالُ الصَّالِحِ لِلرَّجُلِ الصَّالِحِ. Nabi sallallahu alayhi wa sallam said, how beneficial, how beautiful, how valuable wealth is for a person that is righteous. Because righteousness in our wealth and righteousness in our lives will result in righteousness in our community. So you are learning today how to invest with Sharia portfolio, specifically through the guidelines and the education and the knowledge of very senior people like Nadeem, that is going to result not in only your wealth, growth of your wealth, but it will inshallah also result in the wealth of our community and in the growth of Islamic finance. May Allah subhanahu wa ta'ala give all of you tawfiq. May Allah subhanahu wa ta'ala make this beneficial for us all. Without further ado, inshallah, we're going to start with this beautiful presentation that is prepared by our brother Nadeem, Mian, inshallah. So please pay attention and be attentive, and may Allah subhanahu wa ta'ala make it easy for you all. Jazakumullah khairan.
So, Assalamu alaikum, everyone. Jazakallah khair, Brother Nabil, for the introduction. My name is Nadeem Mian. I am the portfolio manager for Sharia Portfolio. And, first off, I'd like to thank Marpol and the Westminster Muslim community for this partnership to join us tonight for tonight's presentation. And tonight's presentation will be about basically the 101 of halal investing and value investing and what that really is. And hopefully, inshallah, the best part of this presentation is going to be the Q&A, because I'm sure there's going to be a lot of questions that you will all be having. And so we do have a Q&A tab where you can put your questions down, and inshallah, towards the end, Brother Nabil will help quarterback that Q&A session. So just a quick disclaimer, these are just standard kind of compliance, the compliance slide, as I like to call them, that we must display. We are a full service portfolio management firm, both in Ontario and in BC and in Alberta. So before I begin, just quick background about myself is I've been in the industry for, alhamdulillah, about 20 years now. I started off in New York with a mid-tier Wall Street firm. I'm originally Canadian, so I'm not an American, but I was born and raised in Montreal. But after my undergrad, I did go to New York to start my career there, where I worked with a mid-tier Wall Street firm by the name of Oppenheimer. And then subsequently, kind of in 2002, made my way back to Canada, where I had roles at HSBC, Canaccord Capital, and previous to ShariaPortfolio, I was with the Royal Bank. My experience has always been on the basically on the private client services sector. In other words, advising clients on the management of their wealth and capital markets. But for the bulk of my tenure, it's been in the traditional space, because quite frankly, the Sharia compliance space in Canada was not there. And so there weren't many opportunities, for Muslim financial professionals like myself to go to. But, alhamdulillah, we've had this opportunity now with ShariaPortfolio. And so I'm going to dive into that. So who is ShariaPortfolio? And first off, just a quick agenda here. We're going to talk about about ShariaPortfolio Canada, who we are, what we're trying to do here. We're going to talk about the stock market. We probably have some of the attendees here probably have anywhere from no experience to extensive experience when it comes to investing. So, we'll start from the ground level and maybe, work our way up. And we're going to talk about also the concept of value investing, what that means when it comes to managing money. And of course, Sharia compliance. In the investing world, what is Sharia compliant? What makes investments haram or halal? So we'll walk through that. And then of course, we're going to, talk about how to get started with ShariaPortfolio if you are somebody who, would be interested in our services and would love to, have us look after your financial well-being. And then, of course, we're going to end it off with the Q&A session, which, like I say, can be the best part of this webinar. So, who is ShariaPortfolio? I mean, first off, what we're doing here is, we're offering professionally managed investment solutions that help Muslims achieve their life goals while honoring their personal values. So in short, it's trying to reach your financial objectives without, going against your Islamic faith. And that is a mission statement, if you want to call it, but I think it's as simple as it gets. And I think it defines who we are as a firm. We are licensed by the Ontario Securities Commission as a portfolio manager. We are also licensed in British Columbia as well. As up until recently, we got licensed in Alberta as well. So those are the 3 provinces right now that we're registering. Inshallah, the plan is to add more provinces to the lineup as time goes on. Now, the parent company, ShariaPortfolio USA, this was founded back in 2003, and the parent company is licensed by the SEC, so that's the Securities and Exchange Commission in the U.S. That is basically the governing body that overlooks and regulates the industries. Similarly, in Canada, we have these provincial security commissions that overlook our business in Canada. So one thing that I will say is that the wealth management, the securities business in not just in Canada but in the U.S. and around the world, it is very regulated, and as time is going on, that is getting more and more, I would say, more and more regulated, and ultimately that's actually a good thing for clients, because that just means that we want to protect the client and their money in terms of some of the scrupulous practice that might happen there. So in Canada, ShariaPortfolio, we have clients in Canada. The parent company has obviously in the U.S. and now we're also getting a lot of interest from around the world. So we are truly a global firm in that sense, that we have the parent looking after Americans, Canadian, obviously the Canadians, but we also have international clients as well. And of course, as the name says, we are dedicated to Sharia compliant portfolio. That it's in our name, and it's as simple as that in the sense that we don't provide any non-Sharia products or investments. We don't, if there is an investment or something out there that is not compliant, not Sharia compliant, we will not advise it. We will not recommend it, and we will try in most cases not even to hold it. So that is something that we are obviously dedicated to, and we do offer all sorts of accounts. So RSPs, TFSAs, locked-in accounts, RIFs. It is the full it is the full menu in that sense. Is that typically you might walk into your bank, or you might walk into, say, an investment firm, work with a financial advisor there, and it's the exact same format as what you would get at any bank-owned or any investment firm out there. So that's something that we did want to hammer in, as those are our competitors, and we have the ability to provide you that full suite of products. Now we have two types of offerings. One is what we call the Access offering. That is the premier solution for comprehensive wealth management. And what that means is I guess you could say, a service where if you are a little bit more experienced, you have more money to invest, for example, and there might be some more sophisticated needs that you have. The Access portfolio is an offering where we will give you that type of management, where we include individual stocks. There's a minimum amount to open that account. Typically it's about 100,000, and in that case, what you're doing is you are getting a customized portfolio tailored to your objectives, and it includes it's a combination of exchange traded funds, stocks, and so forth. And we'll get into that later and what that means. But that's the Access. And the Express service. This is something that it's an economical solution to halal investing. It's great for new investors. It's great for young investors that are looking to start up. You can start with as little as $1,000, and again, it's an offering that can get you started, and it's an economical way as well. Now we are partnered with Fidelity Asset Management. Now Fidelity is essentially our custodian bank. So this is very important in the sense that we get a lot of questions. Well, who am I giving my money to? In this case, Fidelity Asset Management, if you never heard of this company, they're, I think, the third largest holder of assets in the world. We're not just talking about Canada. So this is a global firm, and they're one of the largest holders by I have about 3.5 trillion assets under management. So what we're doing is, when clients come to us and they open an account, and they're either transferring funds over to us or depositing funds, the account is actually held at Fidelity Clearing Canada. And when we provide our clients with online access to their account, it's actually a Fidelity portal. And the reason why I'm saying this is that where ShariaPortfolio is not holding the assets, we're advising, we're managing, we're providing the customer service and all that other stuff, but ultimately the custodian of those assets is Fidelity. So, and again, the question that I get all the time, and I'll just address the elephant in the room, is what if ShariaPortfolio decides that they want to just go back to the US and walk away from Canada? What happens to my money? I get that question quite often. And the answer to that is, well, first of all, we don't intend that to happen. We're inshallah, we're here for the long term. We believe in, halal investing in Canada. But in the event, if you feel that that's a possibility and that does happen, then your assets are actually with Fidelity. ShariaPortfolio does not have custody of your assets. And so in that case, Fidelity is where your account essentially is being held. And Fidelity is actually insured by CIPF, which means in Canadian banks, everyone's heard of CDIC, where $100,000 worth of your investments are insured in the event that the bank goes bankrupt. Well, in this case, it's $1 million in the event if Fidelity were to, let's just say, go bankrupt. Your account is insured up to $1 million. So this is the equivalent of the CDIC, for investment firms. And so again, that's in a situation if, let's just say, a company were to become insolvent, and that company we're talking about is Fidelity. So that's just kind of about ShariaPortfolio. just to kind of give you a good background as far as what our position is in Canada and across the world. This is our team. This is our Canadian team, and it's led by the founder and the CEO, Naushad Virji. Some of you out in Vancouver may have already met and spoken with him. Naushad, I guess, got tired of getting a lot of Canadian phone calls when he was in Florida and decided, you know what, it's time, maybe we take a look at Canada. So, with Naushad's leadership, alhamdulillah, we started up in Canada. And of course, Sabina Mershi, she helped Naushad with a lot of the client operations in the U.S. So she joined Canada to help head the operations. And myself, of course, I kind of joined because let's face it, we needed a qualified and experienced individual in Canada to kind of help the ball moving. And so my role here as portfolio manager is ultimately to overlook the investments that we have. And of course, right now, doing a lot of the financial advisory stuff as well. So, and then, that's my role. And of course, Irfan is our compliance officer. So as I mentioned before, our industry is very heavily regulated by the Ontario Securities Commission, BC Security Commission. And so Irfan kind of heads that in the sense that he is our liaison to the firm and the regulators. And, so we're again, doing everything according to, the rule books. Brother Salahuddin is our marketing manager. He helped put the logistics of this webinar together, and we've been doing quite a bit of webinars to educate the community. And so he's been behind that. And our recent hire is Peter Barron. He's more on the institutional side. So first, we're going to talk about the stock market. And for some of you, this might be a basic, understanding. For others, it might be a new thing. So we're just going to cover the whole, all the bases on this. So first off, what is the stock market? Stocks are ownerships of a business. So if you have any company out there, normally even a private company, if you decided you wanted to take a 25% share of that company, you would take that company, pay 25% worth of it, and that would be your share / stock. So this is a very kind of an easier understanding of what that is. And I'm sure a lot of people already understand it when they look at the market. They see, for example, shares of Apple or shares of BCE or whatever. And all we're doing is when you buy stock in that company, that simply means that you are technically an owner or a share of that company. So and the stock itself, the performance of the stock is dictated a lot on how the company runs its business. In other words, the revenue and the sales and just how the company is performing. That essentially dictates, how well the stocks will either appreciate or depreciate. Bonds, these are typical. We don't use bonds, but it's good to kind of understand what they are. Bonds are essentially interest-based fixed income securities. They could be government, they could be corporate. This is, of course, riba, but it's good to. It's just important to understand what it is. Now, the off the bonds sukuk, which is really what it is, it's a structured fixed income to a company or government. And sukuks are essentially Islamically compliant bonds, if I can say that. And, although we're not going to dive too much into what a sukuk is, and maybe if you want, you can ask in the Q&A, but to give you a good, simple understanding, a sukuk is essentially a kind of like a lease agreement where it's backed up by a tangible asset. And the best way to explain sukuk is, in my opinion, is just to give you an example, maybe. So, for example, let's just say you have a government, and in the sukuk world, 95% of them are from Muslim countries. So let's just say you have the government of, say, Malaysia, and they want to build a toll highway, an infrastructure project that will be generating a revenue. So what they'll do is in our world, in the Canadian world, the government will probably launch some bonds and they'll finance it through that. But in the sukuk world, what they do is the government will launch these sukuk funds, and these sukuk funds are tied to the asset. So the revenue that's being generated from the tangible asset, that income is flowing through to the Sukuk unit holders. So, it works more in terms of like a lease agreement. Again, I don't want to, I don't want to take too much time as far as what a Sukuk is, but the fundamental understanding is there's an asset behind this Sukuk, and that asset is generating revenue, and that's how the unit holder is getting that. So in that sense, it is comparable. People like to compare them to bonds, but the structure is completely different, and the structure is deemed to be Sharia compliant. So ultimately what we do is, as portfolio managers, our job is to take these different types of assets and construct a portfolio. And what we do as portfolio managers is, depending on what your risk level or what type of investor you are, that composition could be very different. So somebody who's very conservative to somebody who's very aggressive, the composition of stocks and sukuks and other assets will vary quite differently. So this is not a one shoe fits all offering. What we're doing is our portfolios are customized to every individual based on what their needs and what the risk tolerance and so forth is, right? So, diving into the stock market history, this chart is just an illustration. I think people, we're very visual people in nature. And what this is really doing is just kind of showing you what the S&P 500 has done. Now, the S&P 500 is the U.S. benchmark market, which is one of the most actively followed, probably the most actively followed benchmark out in the world. And, this chart is kind of telling us, well, in a period of 2007 to 2009, it looked like the stock market didn't do too well. And yes, you will get periods like this. However, in the larger scheme of things, what you'll notice is that period, is kind of just a bump in the road. And so our focus really is, as portfolio managers, is that, yes, the view has to be long-term. We're not, ShariaPortfolio Canada is not, giving the objective of 1 to 2 years or something very short. If you have money and if your time horizon is 1 year or less or something to that respect, then this might not be for you. What we're focusing on is the long-term growth of your capital, not the 1 year growth. Of course, we have targets that we'd like to obtain on an annual basis, but overall, when we're speaking to clients, the one of the most important questions we ask is, what's your time horizon? And if your time horizon is long-term, then we can kind of, go on to the next step, right? So again, going back to this chart, what we're trying to really say is that in the short term, yes, we've gotten some, periods of downside, but overall, if you look at the long term, the trend has been to the upside, and that that still stays true even today. So we get a question of, why should we invest, right? And of course, there are a variety of objectives that every individual has. It could be, purchasing a new home, which is quite a nice new home, I guess. Education, retirement, that sports car might mean just, growing your wealth. And of course, the last piece is charity, which again, the more wealth you have, the more money you can give to charity and reap the rewards of that in the deen and dunya, of course. So, there's a variety of reasons to invest. And I think ultimately, our job is to try to help you obtain those objectives. So for the most part, of course, we get, on this list, retirement kind of is one of the top reasons why people invest. So we do get a lot of RSP accounts. And so, the conversation on that would be different than, say, somebody who is, trying to kind of grow their capital because they've already taken care of their investment, right? So our role, again, is to figure out, what is driving you or what is your objective. And based on that, we can provide that advice accordingly, right? So just talking about taxes briefly, this chart basically talks about the returns on certain asset classes and what that means before tax and after tax. So off the bat, right, equities, typically when we're looking at stocks, we're talking about mostly capital gains and some dividends. Now, capital gains are actually taxed at the lowest rate possible. And so in other words, if you were to, let's just say, grow your capital by 9.7%, and you did it in a taxable account, your after-tax return, if you were to kind of use the highest marginal tax bracket, roughly would be about 6.9%, right? Whereas with stuff that's on fixed income, like for example, bonds or anything sitting in the bank account with interest rate or so forth, that's actually taxed at the heaviest rate. And, so in other words, if you were earning 5%, almost in some cases, half of that return is being taxed. So, I think with this chart, what we're also trying to say is, of course, for halal reasons, you should not be investing in riba, but also from a performance basis, on a long-term basis, it's been proven that interest, especially from a tax component, actually is a drag on your return rather than the return itself. So, at ShariaPortfolio, what we try to do is obviously focusing on tax efficient strategies. And, the fact that we stay away from riba, we are also, you could say, working in a more tax efficient manner when we're managing a portfolio. This slide here basically talks about lifestyle. So for example, right now, most of us here are earning their income from primary sources, meaning to say you're working, whether you have a business or whether you're working as a professional or otherwise, your 90% of your money is basically coming from your work, and very little is coming from other sources like stocks or other investments that you might have, for example, right? Now, as time goes on, as you kind of enter into retirement, this dynamic starts to switch, and that's what we're trying to do. Is when you're making that adjustment out of your working years into your retirement years, the goal is that hopefully that these other assets will be able to supplement the income that you have. So, in your retirement years, for example, you might realize that only 20% of your income might be coming from primary, and that could be your CPP or maybe you have a pension. In that case, that this bar might be higher. But overall, what ends up happening is your income will drop as you retire, even though you might have a pension plan or you're relying on CPP or whatever. Your income will drop. So what we're trying to do is maybe those investments that you're accumulating in your working years will now start to supplement your income. Okay. So other investments can mean stuff such as real estate, which a lot of members of our community do as well. Commodities, we actually also at ShariaPortfolio use some various commodities to hedge risk and whatnot, but so that is something that we do as well. Of course, businesses, private, that could just simply mean that you see, it could either mean that you're actively in a business, or it could also mean that you might know somebody who is doing a business, and you just simply become a passive investor into that business as a startup. And of course, there are other assets such as currency and art, which is more kind of not as common, I should say. I mean, it's not a lot of people have high-end art lying around that incorporate that is a big part of their investments, but nonetheless, it is another asset class that people use, right? So value investing, what value investing really is it's a philosophy, it's a strategy. And I'll just kind of read a quote here from Graham and Dodd. An investment operation is one which, upon thorough analysis, promises safety of principal and satisfactory return. Operations not meeting these requirements are speculative. So essentially, the philosophy is when we're looking at stocks specifically, we're looking at it from the point of view as a business. So would we buy this company as a business, not just as a ticker or just as reading a headline? What we try to do here at ShariaPortfolio is roll up our sleeves and actually look at the companies that we are buying, do the work in terms of reading the balance sheet, reading the income statement, figuring out what's going on with the company. And at that point, that's when we decide, is this an investment that we think is going to generate a rate of return and has a good risk reward profile, where we know we're not getting into something that is highly speculative. So that's what value investing really is. And it's not the only thing. Of course, there are many different. I guess it's much more than that, but this is the fundamental kind of thesis of value investing. As I mentioned before, that's really what it is. I kind of explained the quote. This slide pretty much was explained in my previous in the previous slide, where we're doing the fundamental analysis. We're looking at the balance sheets. We're looking at the income statements, and we're going from the angle of we're buying a business, not just simply a stock. And it's that whole perception of what do we value it at versus what the market value is it at, right? So if we think that this company should be worth, say, X dollars, but the market is pricing it at Y, then we think it's Y. In fact, I should probably use numbers as an example. So in other words, if we think the stock is valued at $10, but the market has it at 5, we think in that case, it's a buy, because we think the stock should be trading at 10, right? And of course, everyone's maybe have heard of Warren Buffett, where his famous saying is be fearful when others are greedy, and be greedy when others are fearful. This is, in my 20 years of business, there's been a lot of fear and greed in the marketplace. And, this is probably the quote that keeps me at least emotionally stable during extreme times. And so I think what it's trying to tell you really is that first of all, when it comes to investing, there's a lot of emotional that's involved. In fact, I jokingly say this, sometimes I'm almost like a psychologist speaking to clients, because when it comes to money, people get very emotional with their money. And when taking that into account, when you look at this quote, what it's basically telling us is that, you gotta almost take the emotional aspect out of everything. In fact, use it to your advantage. So when things look really, really bad, that might actually be the best time to get in, and vice versa. I've always said this, is that, people always ask me, oh, well, you know what, the market's too high, or they have this fear. And I tell them, well, you know what, as long as people keep telling me they're scared of the market, that means I can sleep well at night. Because the moment everybody is happy and thinks they can make money, and the saying is, when the shoe shine boy in Wall Street wants to get in the market, or when your grandmother or your grandparents want to get into the market, that's when you should be getting out. So I think it speaks to this quote exactly, where when people are greedy, it's time to be fearful, and vice versa. When people, obviously recently, when we saw the market come down the way that we did, there was a lot of fear out there. And so far what it's telling us is that was a good time to really kind of be greedy. And then I use these words are used in, not in a bad way, but in just to kind of get a point across, right? So Sharia compliance, and I think a lot of you have probably logged on for this specific reason. What does it mean? Halal investing basically refers to investments made in securities which conform to Islamic principles. When these investments adhere to the guidelines of a trustworthy Sharia advisory board, they are, considered to be Sharia compliant. So what does that mean? Our Sharia advisory board is IOFI. So number one, Sharia portfolio is not trying to play the imam here. We're not trying to give fatwas on, this stock or that investment or so forth. Our rule book is IOFI, and IOFI is basically it's a Sharia council body based in Bahrain, where the board is composed of these well-recognized scholars, led by Sheikh Muhammad Taqi Usmani, and it's a diverse board as well. So we have scholars from all parts of the world, from Saudi Arabia to Pakistan to Malaysia, and so it's a standard right now that in international Islamic finance practices, it is the gold standard. So a lot of the Islamic banks around the world are using the IOFI standard, and I'm going to dive into what that standard is. But the rule book essentially covers not just investing; it covers lending, it covers investing, it covers insurance, and so forth. So you know that that's kind of what we've decided, is that we're not going to play the imam in this. We're going to stick to this guideline. And so what we do is, when there's a stock or when there's any type of investment out there, we actually have a software platform that we would punch in the company. And at that point, the company has an algorithm that has the IOFI standard incorporated in it. And at that point, it shoots out whether it passes or it fails that standard. And ultimately, it also gives us the ability to generate a report and figure out, okay, where did they pass it? Where did they fail it? Right. So we're not doing this by the hip here, where we've adopted a standard and we've taken that standard. We're using a specific software that that a lot of the professionals around the world use, and so that's kind of our filtration system, so to speak. So of course, what that means is that, number one, this is the eye test that I think a lot of even the novice investors, and even my kids can do this, is where you're not investing into gambling, alcohol, pork products, weapons, highly leveraged businesses, tobacco, adult entertainment, music, cinema, and broadcasting. So this is the eye test. And I think this is something that, people, if we didn't have ShariaPortfolio in Canada, if it wasn't so standardized, this would be the common thing that would say, okay, I'm just going to stay away from them. That's great. But it's a little bit more than that, right? The guideline really is, it's stocks, it's mutual funds, it's ETFs that are eligible for Sharia compliant consideration. And some assets are not going to be. So like preferred shares are not Sharia compliant. But these are, on top of the eye test, these are the financial ratios that we look at. And this is IOFI standard, where number one, the interest-bearing debt over 12 months average has to be less than 30% of the market capitalization. So basically, every company out there in the world has debt, and that debt must be less than 30% of the market capitalization of the company. The market capitalization essentially is the equity component of the company. So number one, that's a financial criteria. There are other financial criteria where such as cash equivalents, and accounts receivables over assets should be less than 30%. So again, that speaks to a company possibly hoarding cash. We want to make sure that we're not investing into companies that are just simply hoarding cash and that that don't have these kind of those types of ratios. And of course, the last one is where cumulative revenue from non-compliant activities and non-operating interest income should not exceed 5% of total income. So what that means, and I'll explain this with a quick example here. Let's take Walmart as an example, right? Everyone goes to Walmart, does their shopping there, whatever, right? And you can buy all sorts of product. On surface, it's a department store, and you can say that, yes, it seems to be a halal business. However, Walmart does sell haram products in its stores. And so what this point is really trying to say is that as long as 5%, as long as the haram sources, the haram products that they're selling does not exceed 5% of the total income, that's fine. Now in Walmart's case, what's happened is that they've actually crossed the 5%. So, and a funny note here is that Walmart's the largest seller of weapons in the US. And so that's probably a big reason why it failed the test. And so Walmart is not IOFI compliant. It's not in our portfolios. And so by that standard, we don't hold it and we won't own it until maybe if it does get below the 5%, we'll think of owning it. But for the time being, it's to that degree that we look at companies. So these ratios, what I will say is a couple of things. Number one, of course, we're staying away from haram sectors. We're also staying away from those companies that are kind of, making a little too much money from haram sources. But also what we're doing here, specifically with the first two ratios, is that number one, we're buying companies that are under leveraged, that don't have too much debt on the balance sheet. And number two, there's the cash equivalent. We're buying companies that are running a good balance sheet. So these are just naturally, not just, religious requirements, but these, I would say, are requirements that you look at buying companies if you think that there's value in them, right? So these are kind of ratios that I would say from a performance standpoint, from an accounting standpoint, are good things to look at when you're buying, when you're thinking of making an investment. So I'm just going to dive into, so we've talked about the spiritual aspect of Sharia portfolio and what stocks are and how, we screen them and so forth. So what we've done is I wanted to, when I joined Sharia portfolio and before that I studied Islamic finance, not at a school, but just kind of look at it from the standpoint is this, is this a viable business, right? And I view halal investing kind of like fasting, in the sense that we as Muslims, we fast 30 days in Ramadan, and it's required by us. There's a spiritual reward for us, and we benefit from that. From I would say more for our afterlife, for asking for forgiveness and everything, right? However, we've come to realize that there's also a reward in this dunya for fasting, which is related to your health. And this is published by various medical journals or WebMD or wherever you want to go, where they talk about just the benefits of fasting, and that has nothing to do with Ramadan. And so halal investing is similar to that, in the sense that so far we've been talking about the spiritual aspect of halal investing, why we should invest halal, and we stay away from this, we stay away from that. But at the end of the day, it's your money, and you want to see, okay, is investing halal going to cost my performance? And the answer, I believe, to that is no. And right now, so far, I know this is just a short time frame, but so far we launched our fund, the SPUS. And over here, what we did is, the SPUS is basically a fund that took the S&P 500 and screened all the 500 companies there and came out with the ones that were compliant. So that works out to about 200 names or so. Now, what you can see from this chart is that fund has actually outperformed the S&P 500 and the TSX by a wide margin. And one of the explanations that I will say here for that is the fact that we don't buy over leveraged companies, and we buy companies with good balance sheet. And of course, we're the fact that we're not into some of those haram sectors, we're actually into the sectors that we think that are going to have growth in the future, like technology and healthcare, right? So what I'm trying to show with this chart is that overall, halal investing so far, it benefits us spiritual, but I think even in the real world, in terms of performance, we've been outperforming the market. And those Islamic restrictions are actually rewarding us in this dunya in terms of performance so far. So I think that's something that I related back to fasting, in the sense that there's a spiritual obviously requirement, but it does also benefit us in the dunya as well. So that was our fund. This is one of our access portfolio model portfolios that we have, and you can see over here. What I just simply wanted to show with this is that this is what a portfolio would look like. For example, an access portfolio, in the sense that we use the ETFs that we have, combine that with some individual stocks. So really what I'm trying to show you is that this, again, is a year-to-date performance. And year-to-date, we're basically in the growth model, we're actually up close to about 10%. Whereas, again, the S&P 500 and the S&P 500 is basically flat for the year, and the TSX is actually still negative 5% for the year. So alhamdulillah, through our management, at least this year today, with the market that we've had, especially, we've been able to outperform, the benchmarks out there. So, and this also gives you a sneak peek as far as what types of companies are we buying, and if you want more information on the exact specific funds and whatnot, I'll be happy to provide that information to you. But overall, some of the names you'll probably recognize, like Microsoft, Procter & Gamble, Zoom Video, which we're actually on right now, is one of our holdings. And of course, there are names like Canada Goose, Shopify. So again, these are just top 10 holdings. There's many more holdings behind it, but the core holdings that we have here are the ETFs that we use. So we use the previous chart where I showed you that fund. That's called the SPUS ETF. It's an exchange traded fund that, like I said, invests into 200 companies that are Sharia compliant on the S&P 500. We also use gold as an asset, and this is a fund that simply tracks the price of gold. And we think there are many benefits to owning gold, both in bad times and in good times. And the other fund that the third ETF that we have in the portfolio is the Sukuk ETF, which I previously mentioned, is kind of like the fixed income. Now, the Sukuks are, from a performance standpoint, they're there to provide you an income stream. They're not, unlike common shares, you're not going to, the expected return shouldn't be what you would get from a stock. In other words, with common stocks, typically you're looking at growth. With Sukuks, the growth will be limited. However, you're really kind of investing for is stability, income, and maybe possibly a little bit of growth. So if, let's just say everything's a go here, what to get started in halal investing, if you wanted to do this, how can you do it, right? So number one, you can always do this yourself, of course. You can open up your online account. You can buy and sell the stock funds on your own. In order for you to do it in a Sharia compliant manner, however, you would really have to kind of roll up your sleeves, look at the prospectus, maybe go through a Sharia compliant fund, see what's on the list. I know there are even some apps right now that you could probably subscribe to and help you do that. But to be honest with you, it's a full-time job, because just because a company is Sharia compliant today does not mean that it's going to be Sharia compliant, next month from now. Perfect example is that we owned Delta Airlines in our portfolio for quite some time, and it did generate a good return. But when the market kind of did what it did, it actually became uncompliant, and we had to kind of sell it. So we do that on a consistent basis. We actually have every month our fund is Sharia screened for our holdings to make sure that they're compliant. And we also have a third-party Sharia audit that we do as well. So it's, again, there's two aspects. Number one, you have to make sure that your stocks are and your investments are halal. And of course, then you have to pick them and make sure that, it's not just is it halal, but is it still a worthy investment from a performance standpoint? Do you really want to own this or not, right? So that's why, working with us as portfolio managers, we might be able to help guide you with that. So as I mentioned, there are two types of offerings. The express service, which is kind of the easy setup, more kind of tailored towards the new investor or somebody, who maybe is not as experienced, where you can start with as little as 1,000. It's a low fee. It's only 50 basis points, 0.5% fee per annum. And you still get to work with a licensed professional like myself. However, that account is only limited to the exchange traded funds that I mentioned. So the SPUS, the Sukuk, and the gold. So in other words, your limit, we're not getting into any individual stocks or so. Whereas with the Access solution, of course, you have more of a personal service on that. The portfolio is customized much more than what the Express does. You have, of course, a dedicated team, that's overlooking your portfolio one-on-one. And of course, we provide you with a personal portal as well. Like I mentioned, it's a Fidelity portal. And, like I mentioned, we do service every type of account. So it's everything from the RSPs, the TFSAs, that you would have at any institution, whether it's at your bank or another investment firm. We're able to actually transfer those and manage those accounts over. So I guess, again, when you're choosing an advisor, these are just some of the things that you look at. Again, we'd love for you to have us as your first option. But in the event, if you decide for whatever reason you want to take another route, and you wanted to do it in a halal way, then I would suggest look at, their Sharia compliance and say, okay, well, if I'm going to do this in a halal way, what are you guys doing to ensure that? So we understand that it's a scattered market in the sense that we know that there are some professionals out there that are trying to do this. And, by all means, we welcome that. And we hope that, that market continues to thrive. But we believe we're the only one that's solely dedicated to this Sharia compliance, that we actually put our name on it. We will we walk you through exactly how the Sharia screening takes fold. And, and like I said, our ETFs have a Sharia audit certificate that you can actually go onto our website and see for yourself. And of course, there are going to be some components you look at. We have a management fee structure. The Express is about 50 basis points, whereas with the Access, because it's a little bit more of a higher end offering, the fees start from 0.75 and can get as high as 1.75. Again, it depends on the value of your portfolio and other aspects. And of course, the investment philosophy that we talked about, value investing. So that's pretty much it. I think this was just a good introduction to, our firm, what we're trying to do here, myself and our strategy. So, with that, I'd like to kind of conclude my presentation, and inshallah, I'll welcome all your questions at this point. So. And maybe I'm just going through the Q&A here, and I'll just kind of dive into some of the questions that I have here. So there's a question here that says, what is Sheikh Omar Suleiman's relationship with ShariaPortfolio as spiritual advisor? Okay, so so Sheikh Omar Suleiman is our ethical advisor for our U.S. company. He's there to give us any guidance if there are, for example, maybe questions or something that we might have on a topic, and we're looking for his guidance. That is something that we would, lean to him towards. So he does sit on that ethical board. However, for the Canadian business, the Canadian regulators prohibit a religious figure such as a priest or imam or a rabbi to endorse any financial institution. So for Canadian purposes, we do not promote him as a part of the Canadian business. He is a part of the U.S. business, but he's not necessarily with us. But we are. But I will say this: we are looking for a local body in Canada as a Sharia advisor and auditor. So that is, inshallah, in the works, and hopefully we'll have some news on that shortly. I have 1 second here. What is the minimum investment one can make? I think I've answered that question. That the minimum investment for the Express is actually $1,000. And it can be $1,000. It can be in any account like a TFSA, an RSP, or just a non-registered account. What is the difference between registered and non-registered account? So a registered account is they're basically your RSPs, your TFSAs locked in. So these are accounts that have a government registration on it. So to give you an example, they have tax benefits, and that's what essentially makes them registered. So for example, when you have an RSP and you make a contribution, meaning to say if you invest into your RSP, you actually get a tax credit for it, right? So that's why it's quote unquote registered by the government. And there's also some other benefits that you get by being registered. So for example, with an RSP and even with a TFSA, if one were to say pass, you actually assign beneficiaries to that account. And in that case, what ends up happening is, in most cases when it's a spouse, the money will bypass the estate and go straight to the beneficiary, right? So that's registered, but specifically it's more tiered towards tax. So even like the TFSA, which is also a registered account, it's registered by the government because of the tax benefit that it has. In other words, when your money grows in a TFSA, you're not taxed. So that's what a registered is. A non-registered is simply just a regular account where there are no tax benefits. So you are just being taxed as a regular entity. Okay. Okay. Then what are your management fees like? So I did answer that, where it's basically for the Express, it's 0.5, half a percent per annum. We charge that on a monthly basis. And the Access starts from 0.75 up till 1.75, and with the minimum of 100,000. And again, it's tiered pricing. And I think for that, you'd probably have to either speak to myself or somebody else, one of my colleagues, to figure out where you would fall, in terms of that. But just to kind of give you an idea, it starts from 0.75 up as high as 1.75 for the Access. Okay, on the list of top holdings of the SPUS, Shopify and Zoom are listed. On an app called Zoya, both are listed as non-compliant. So do Sharia compliance standards vary a lot depending on the board that is followed? I know you can't comment on other companies, but it is confusing. So this is a good question here. It does talk about how some companies are, they're using, I'm familiar with Zoya. Now, I can't comment on Zoya, but what I can do is I can comment on the service that we use. We use Ideal Ratings. Now, Ideal Ratings is not an app. It's affiliated with Thomson Reuters, and it's the, when you're looking at companies being compliant or non-compliant, one of the most important things is the data. How reliable and how good is the data? And so with Ideal, because the fact that the data is probably the best in the industry, we're pretty confident with the platform that we use, which is Ideal. And Ideal is something that most financial institutions are using. Financial institutions are not using Zoya. So although it's cool to have an app that can do that, I would probably be more, I would go more towards a platform that is used by financial professionals than somebody that you can just download by yourself for free, right? So that's my opinion. I think as far as why the discrepancies are there, I do see them there, but I can only comment on the platform that we use, and I can say that that's the gold standard in my opinion. Second here. How different are you from Wealthsimple in Canada, which offers free halal portfolio? Well, first of all, nothing is free in this world. Okay. Wealthsimple is not offering you anything free. Sure, they might say trading is free, whatever, but at the end of the day, there's a fee. Okay, so I'm a firm believer in that there's no such thing as a free lunch. Number two is that we are active managers. So Wealthsimple is just simply tracking, they're buying an index, and that's pretty much it. Whereas with us, we're doing a little bit more than that, right? We're actually, especially for our Access portfolios, we're actively managing it. So we're not just buying it just because it's Sharia compliant. We're also buying companies because we think there's value in them. There might be companies that are Sharia compliant, but we won't include them because we feel that, it's not a viable investment in our portfolio, right? So that's number two, is how we're different from them. The third thing that I'll say here is this, and this is very important. We're dedicated to Islamic finance. We're dedicated to halal investing. Wealthsimple is good for them that they launched a product, but this is a company that has other pipelines, and to them, this is another pipeline. And I always get, asked the question, are you guys going to be providing more products? Are you guys going to be doing more? Of course, we'd love to do more, but, and we're a business. And I think ultimately, the only way we're going to thrive, and we're going to be honest with you, is if the community buys into us. And I think that's very important. We believe our clients invest with a purpose. And if our clients believe that, we want to see this grow, then we'd like to think that they would choose us over Wealthsimple. Now, I don't mean to make this as a sleazy sales pitch, but it is true in the sense that tomorrow Wealthsimple can look at this product and say, it's not cutting our profit line, so we're just gonna, sell it off. And they've actually done some of that. So the thing is, that's how the third thing we're different. We as I say, we eat what we cook. And so I think that's very important. And you know what, the fourth thing I'll say is that I've seen, we've had clients who've had Wealthsimple accounts, and, they've said, okay, well, here, take a look at my account and let me know how it's done. from a performance standpoint, right? It's not even close. Like I showed you the chart on the S&P and how our fund has done versus the S&P and the TSX. Guess what? Wealthsimple, from the last time I checked on one of my clients, was underperforming the S&P 500. So that tells you where we are. So I think that's, so there are many bullet points how we're different. It's from the fact that we're a little bit more active. We're not just shooting a product out there to generate some revenue. We're obviously doing this for a business, but at the same time, we're a believer in this. And from a performance standpoint, it's not even close. We've outperformed it quite significantly. And I'd be happy to do that. If anybody else has a Wealthsimple account out there, by all means, send me your statement. I'll do a complimentary review. I'll show you exactly what the return has been, and I'll show you exactly how our funds or our portfolios have done in that same time frame, or at least year to date. I can't go on the exact time frame, but I can tell you at least on the year to date how we've done versus Wealthsimple. What is the method of dividend cleansing? So I think this is a question devoted towards purification. If I think that's where the cleansing portion comes. So what we do here is this: with cleansing, it's the idea of, okay, we have a portfolio, and it speaks to that. It speaks to that point where companies derive some income from haram sources, that 5%. So let's just say, when we take a look at our portfolio, right, in a given year, we have an approximate number as far as what would be the average, non-permissible income in the portfolio. So that could be anywhere from, say, 1 to 2%, let's just say hypothetically. I think in the past, our US portfolios have averaged about 1%, something to that effect, right? So what we do, what that simply means is that 1% is being earned in a haram way. What we do is we provide clients with that number, and then it's on the client at that point to make that judgment, to say, okay, you know what, this is coming from our haram sources, so it has to be kind of donated away. And Brother Nabil can even talk about that, where it has to be donated to. It's not zakat. It's done separately.
Donated with no intention of reward.
Exactly. So what we do from that standpoint is we just provide you with that percent. What is the haram percent or the non-permissible percent? And then again, it's on the individual client to kind of do that. Okay. On one of the slides, you compared the portfolio returns with the S&P 500. What is the performance when compared to other portfolios? How liquid are the Sharia portfolios? So other portfolios, again, the Wealthsimple example that I mentioned before. Again, this is just a handful of clients that gave me the Wealthsimple portfolio, and I took a look at it, and I could do a year-to-date number as far as how it's performed. The S&P 500 obviously is the benchmark. I think that's the one that everyone looks at. Outside of that, I mean, there are the TSX. The TSX was also on that list, and you could see that we fared even better with that. The other ones the Dow Jones as well. We've been outperforming them as well. As far as other indexes out there, like European indexes and so forth, I can do that. The only index that we're probably underperforming is the NASDAQ, which is basically mostly a technology index. But the one thing that I'll say is that, our fund, it's a diversified fund. So meaning to say that it's invested into all sorts of sectors like technology, healthcare, consumer discretionaries and energy and so forth, right? So you're getting not, one component of the market, you're getting, a wide variety. So again, it depends, but I guess the only way I can compare it is if you give me, if you have a portfolio for me to compare it to, I'd be happy to do that. The only thing that I can do is just for the time being is show you our numbers, and then you can take a look at it for yourself, right? for the minimum portfolio of any, for the minimum portfolio or any portfolio, is there a lock on it? Can you cash it out? Oh yeah, so that was the other question I think in the previous one as well. So everything that we invest in is essentially exchange traded funds, which again are listed on stock exchanges, and individual stocks. So it's liquid. In other words, if let's just say you invested with us today, and let's just say even a week from now or a month from now, whenever you change your mind and you say, you know what, just liquidate my portfolio and I want my money back. Basically, we will liquidate your portfolio and you can cash out, and you can have your funds back within 48 hours, right? So there's no tie-in in the sense that you're locked into this thing for 2 years. Of course, we make the argument that this portfolio should be for long-term investments. That's what the goal should be. However, nothing stops you, whether it's a decision or whether it's even an emergency need, for example, right, where you need the money for some God forbid bad reason. You're able to have the access to the funds within 48 hours. Now, with registered accounts, with RSP account, we follow it'd be no different than if it was at another financial institution, in the sense that with an RSP, you have to kind of unlock it, their taxes and all sorts of other stuff that's tied to it. That's not ShariaPortfolio doing it. That's standard across the industry. So with registered accounts, yeah, you'll have to kind of factor in some tax issues if you wanted to quote unquote cash it out and take the money, right? 1 second here. So I know you mentioned this, but what provinces can you operate in again? Okay, so again, we're in Ontario, British Columbia, and Alberta. And inshallah, the plan is to get to other provinces shortly. Do you offer day trading on penny stocks? No, we do not. That's something that we don't believe in. So we don't do that. I'm a licensed financial advisor and would like to work with ShariaPortfolio. What's the requirement? So what I would suggest is, reach out to me. You see my phone number and email on the slide. Just please take note of it. Send me a quick email or a text message or whatever, and then inshallah we can talk later. But the requirement really would be, if anybody else has that question or hasn't answered that question but would like to know, you do need some a registration requirement. So hopefully, if you've been a financial advisor either at the IROC level or the MFDA level, we might have an option for you. So that would mean that you've done either your CSC or your IFIC, maybe even, but preferably your CSC. That would be a good start. Okay. So thanks for that question. And again, please do reach out to me, and I'll be happy to connect with you. Many people say a crash is due in the stock market given COVID-19 situation and huge amount of dollar printing. Do you think it's the right time to enter the market? So we actually had a webinar on that, a whole webinar on that. So I'm not sure if I'll be able to answer it in one question, but our general view is that the volatility will still exist, at least, especially in the short term. But overall, you know what, we are still continue to be bullish on the market. The COVID-19 is something that was a policy. It was a policy decision. In past, we've seen recessions kind of happen. The recessions have been tied to, something like the banks raising interest rates too high. There's a slowdown in the economy because there's an asset bubble or things of that sort. So in other words, normally we've had recessions and all sorts of crashes because of economic reasons. This was a conscious lockdown, a policy decision, which has impacted the market. So it's very unique. So I think because it's unique, I think in that context, we do believe that, inshallah, when we do come out of this COVID-19 pandemic, and of course, we are starting to see signs of that, we think, the market will continue to go higher because, quite frankly, I mean, there's not many other asset classes that you could put your money into that can give you that rate of return. But again, it's a very, it's a question that can't, I'm going to fail to answer it in just one setting. I'd love for you to connect with me, and I can give you some more context. But in general, what I will say here is this. There is a huge amount of cash that is just sitting in money markets, just cash. And normally when bubbles happen, right, when you get like a tech-com bubble or any other type of bubble that's happened in the past, it's been because too many people, too much money is in the market, in the stock market especially. And right now, that's not the case, believe it or not. There's a lot of money that's just sitting on the sideline that's not invested in the market. So what that really is, that's kind of like dry powder for the market to possibly go higher. And I think that has something to do with it. At the same time, where we are, we're active managers, so we are only looking at areas of the market where we think that there will be growth. In other words, we're not simply buying, looking at every company in the same light. We do have a little bit of a focus on companies that have done well in the pandemic and will continue to do well after the pandemic. So these are companies with certain investment themes. So we are focusing on technology, we are focusing on healthcare, and we are focused on select consumer discretionary areas. So what that means is that we think that these sectors will continue to do well after the pandemic. And so that's where we're trying to kind of deploy our clients' money into. And so again, hopefully I've given you some answer to that question, but overall, we don't think that there's a market crash coming or we're going to go back to the March lows. On average, how long does it take to see profits? A month or two? So first of all, you can view your account online. You can see the value of your portfolio on a daily basis, although we don't suggest you do that, but you can. So you will see the value of your portfolio kind of go up and down, so to speak, right? So, it doesn't take long to see profits. You can see profits almost immediately, but it's not something that, most of our portfolios, even the more aggressive ones, it's more of a gradual kind of, growth. It's not something that you put into one day and you're going to see 10% the next morning. We don't do that. We'd like to, but overall we take more of a prudent approach in terms of growing wealth and generating that return and that profit. But yeah, you can pretty much see the value of your portfolio on a daily basis. You don't have to wait a month or two for that. If you have a tax-free account and a cash out, then there shouldn't be tax, right? Okay, so if you have a tax-free, so that's a TFSA, and the TFSA is a tax-free savings account. If this is what the questionnaire, the brother or the sister that's asked this question, if I'm understanding, it's that question. So a tax-free savings account is basically an account where the interest, any return from capital gains, dividends, or interest is essentially tax-free. So in other words, let's just say hypothetically you put $10,000 in this account, and you know what, in the course of a year, let's just say your $10,000 grew to $12,000 because of those capital gains, dividends, and tax and interest, and you decided you wanted to withdraw the whole $12,000. Are you taxed on that? No. However, with TFSA accounts, certain investments will get a withholding tax. And so just be wary of that. For example, any US dividend paying stocks in a TFSA account, they will have a withholding tax. So meaning to say, like for example, if you get paid a dividend, so let's just say you got $10 on dividend from a US stock that you're holding on to. What ends up happening is I believe the government will withhold $1.50 of that $10. So you end up getting $8.50 out of the $10 in a TFSA. So the reason for that is the IRS in the US, they don't recognize a TFSA. And so because of that, they'll take that 15%. However, in an RSP account, because Canada and US have a treaty, no dividends are taxed in that account. So hopefully we're talking about, there's a difference between tax-free and RSPs. The tax-free account, there's just that one kind of issue with any income that you're getting from U.S. security, which you will be subject to a withholding. But outside of that, you're not being taxed. And with the RSP, it's any return that's generated is basically, tax deferred, right? So you charge a fee to manage the portfolio rather than an MER on the fund. Okay, well, that's a good question too. There is an MER on the fund, on the ETFs. And we also have an account fee as well. So there are the account fee, you see that on your monthly statement that you're being charged an account fee, and that account fee kind of covers the services that we provide. And the MER is embedded into the fund, and that is displayed. I mean, it's on our fact sheet and our prospectus as far as what it is. And if you'd like to know, I can even tell you off the bat. The SPUS, the MER is 0.49%, and the SPSK, which is the Sukuk fund, that is 0.65. So that's an embedded fee in the fund. And so they're, especially in the Express portfolio, that's why we've knocked our account fee down to 0.5%. So, because it's only invested in ETFs, when you add the ETF, you're looking at probably about a 1% total fee then at that point, right? So again, we do, the MER is the MER. We will not get away from that. And that gets charged regardless. Can I invest in ShariaPortfolio via my current bank trading account? How to get started with ShariaPortfolio. So you cannot open a ShariaPortfolio account with your bank. You would have to open your account with us. So if you do, for example, have a trading account, at any of your other financial institution, and you would like to use our services, then you would have to basically open an account with us and transfer that account over. So that's that. If an open education plan for my kids with ShariaPortfolio, do I get government grant? Yes, so we do. That's the RESP account. We can set up an RESP account where you get that 20% government grant. So yeah, we do have those, the RESP education plan. And again, that plan is invested in a Sharia compliant way. So a lot of these education plans out there, they kind of don't have, a lot of these education plans will have an interest bearing type of savings bond or something along those lines. We don't, obviously we do it in a Sharia compliant way. I heard you explain this, but which would you recommend, TFSA or our SP? So that's a good question. You know what? It depends on the individual and what they're looking for. So, with a TFSA, I would say this: the RSP is pretty much self-explanatory. This is for your retirement. So if there are funds out there that that you will not be using till your retirement, and let's just say in certain situations you earned a high income and you might want that tax credit, then sure, an RSP is a good solution, a good option for you. On the flip side, if for example, let's just say you have savings, but you're thinking, you know what, maybe in 5 years, I might use it for the purchase of a house, for example, right? But you don't want it earning nothing either. So in that case, maybe a TFSA works. You have a 5-year window. You can take that money, you can maybe grow it for the next 5 years and have the ability to withdraw from it, right? Of course, you can do that from your RSP too if it's a first-time homeowner buyer, but let's just say you don't have that option, or let's just say the fact that you want to have access to that money, a TFSA is a good option. So I would say this: it's a bit of both. I would, kind of use them hand in hand. It does depend on your situation as well. Some people, they work for the government, or they have a set up pension with their employer, that all of a sudden, that plan is already there. So that, having another RSP plan may or may not be a good fit, and therefore they could take the TFSA as the other option, right? So it does kind of depend on your situation as far as what works for you best, basically. Can I move my RSP from TD Canada to ShariaPortfolio? Absolutely. And how to do that is quite simple. You'd contact myself, And the process really is quite simple. I would get an idea. Okay, you have an RSP, so you've explained that to me. I would probably need a statement just to figure out, okay, is it a spousal RSP? What type of RSP is it, and so forth. And then as long as I get that information, maybe by providing a statement, we would open up that same RSP account over here with ShariaPortfolio. We have the transfer forms. We fill out the forms. You don't have to contact TD or anything like that. Everything gets done from our end. TD does get the notice eventually, and the account just takes the transfer happens seamlessly. Okay. Can we open emergency fund account with ShariaPortfolio? I mean, sure. I mean, an emergency fund account would probably be something like a non-registered account, investment account, where you set aside some funds. And in most cases, because it's an emergency fund, we would probably invest it in a very conservative manner. In that case, what we'd probably do is, use the Sukuk fund as an option, where the Sukuk is not, with the Sukuk, you're not getting when you're investing in the stock market, obviously you are suspect to short-term volatility. And so because this is an emergency fund, what we would then do is, take that kind of risk away, in the sense that the money would not be invested into stocks, and we would probably be just exclusively into the SP, SK, and maybe gold, but that all depends on the individual. And we can talk about that, but overall, that would be my advice if you have an emergency fund, how we can do that. Just a non-registered account, and just use the SPSK for that. Can you please go into a bit more detail in the differences between the Express and the Access? Same frequency of Sharia compliance reviews monthly. Okay, so so the Express, first of all, the minimum amount is much less. Express is 1,000, Access is 100,000. That's number one. Number two is with the Express, you do have the initial contact with like someone like myself, where we walk through, okay, this is your money. What would you like to do with it? How do we set this up? We have that discussion and create an investment policy statement for you. Then subsequently making the recommendation, it would be along the lines of, okay, you know what? For example, let's just say your profile is balanced. You're a balanced investor. So we would put a little bit into the equity with the SPUS, and we'd put a little bit into the SPSK, and we put a little bit into gold, right? And subsequently, what we would do is probably rebalance the portfolio once a year. And during that time frame, if you needed to get a hold of me, or you had some questions on your account, by all means, you can contact us. We'd be able to help you out. But in terms of so that Express is limited to that, in the sense that it's a set ETF model that's rebalanced once a year, right? Whereas with the Access, first of all, the minimum is much higher. It's 100,000, and that's 100,000 of the household. Meaning to say, let's just say it was you and your spouse, and both of you guys, one had say 70,000, the other one also had 70,000. So we're looking at 140. So that qualifies as an Access account, right? And so in that case, what we're doing is, number one, the minimum, like I said, is higher. Number two, we do a little bit more managing in terms of ETFs and individual stocks. And we are a little bit more active in terms of rebalancing the portfolio, looking at new ideas, maybe selling out of existing ideas. So a lot of that managing is going on. So in the Access model, for example, let's just say we got a little bit bearish on the market, and we thought one of the things we should maybe do is take a little bit money off of stocks and put them into gold, which we've done actually at the start of the year. We would do that with the Express. You might not get that type of managing, but what you will do is you will get that balancing periodically. So that's a little bit of the difference, is that there is a little bit more active management going on into the Access versus the Express, and also you're getting more in terms of individual stocks with the Access, right? Can you please go into a bit, oh no, sorry, I already answered that question. Is any term in the investment? So I think that simply means, is there any time frame on any of our investments? And the answer to that really is no. I think I previously answered that in the sense that we don't have, your money's not locked in. This would be no different than, again, you having an RSP or a TFSA or any other account at your other financial institution, like your bank, for example. We're not holding your money and saying you can't touch it for 5 years or 2 years or whatever. Everything that we buy is liquid. And by that simply means that if you wanted to liquidate your portfolio, sell out of it, you can do it, and your funds are available within the next 48 hours. 1 second here. How was it determined what constitutes Sharia compliance, i.e. no more than 5% of the non-compliance and the debt ratios exceeding 33%? Is this standard? So first of all, the debt ratio that we use is 30%. Those are IOFI guidelines. And how is it determined what constitutes Sharia compliance? Brother Nabil, you want to chime in on this one? The rule book, again, these are the guidelines that IOFI has laid out. So I would
Brother Nadeem, what was the exact question again? Is it the 5%?
How is it determined what constitutes Sharia compliance, i.e. no more than 5% of non-compliance and debt ratios exceeding 33.3%?
Yeah, 1/3. Okay, so generally the scholars have deduced, because obviously stocks did not exist in the time of the Prophet ﷺ, but the scholars have deduced based on some principles and some ahadith and basically rulings of the scholars in the past on similar type of scenarios. So like in the hadith of Bukhari, the scholars have said regarding wasiyah, when a person is giving their wealth as inheritance, that a maximum amount of wealth that can be given to non-inheritors is 1/3. So based on that hadith, the scholars have said that a person, that 1/3 is a ratio in wealth that is a limitation. So based on what thuluth kabir in the hadith of Bukhari, IOFI standard has implemented that ratio on in the case of on a stock, for example, that the debt ratio maximum can be 33 or 1/3, 33.33, 1/3. Otherwise, it results in being involved in impermissible as a totality.
Okay. All right.
And the 5% is a threshold. So in South Africa, some scholars, like in going back to the 1/3, some scholars have said 25%. However, generally the scholars have said 33.33% is what is applied throughout the world, especially when looking at the Sharia aspect as well as applying it. And the application of that on the overall stock economy kind of builds for us a threshold that is 33.33% or 1/3. Is it something plausible or something that could actually be logically applied? Mm-hmm. So then they found that this is something that does fall within a threshold of Sharia compliance. As for the 5% rule, some have increased more and said 10% and 15%. For 5% is literally like a minimum amount, where it's like a najasa, like impurity. Mm-hmm. When an impurity exists in something, like on clothing or on the body, impurity is, you can say ma'fu'an in Arabic means pardoned as long as it is at a minimum amount. Mm-hmm. So based on that logic of impurity existing in something that is pure, generally, that what is the minimum or what is the maximum amount of impurity that can exist until it makes it all impure. And based on those fiqh rulings, they have said that they've deduced that 5% of a total stock in terms of their profits is the maximum amount. So that's the Sharia kind of backing, but it's not so simple as just telling you like this is an ayah of Quran that says 5%, Or there's this hadith that says 33% for stocks. Those things did not exist. So the scholars, applied their overall knowledge and came to a taqreer, a decision. And that decision is backed by not one or two, but thousands of scholars today.
All right, excellent. All right, well, Brother Nabil, I think that's it for the Q&A, or we don't, okay, just one last one here, and then I think we have to call it the night. If I open both TFSA and RSP, do I have to start each with 1,000 minimum? I guess, you could do, I guess 500, 500 if you wanted to do it that way. Sure, you know what, Bismillah, we can do that. That's not a problem. So with that, again, I just wanted to thank all our attendees for joining, and again, the partnership with Marpol and the Westminster community, and Brother Nabil especially. Thanks for putting this together. We really appreciate it, and by all means, it was a good Q&A, and but yeah, my name and my information is there, so I welcome anybody, everybody out there to get a hold of me if you have any questions, or if you're interested in taking the next step, inshallah, to join ShariaPortfolio. So with that, Jazakallah khair, and thank you again, and inshallah, hopefully we can do this again. Assalamu alaikum.